Hello, everyone. Peace and blessings to all. Hope you're doing well. Wanted to have a video to share some information today. Before we get started, consider subscribing to the channel if you would like more information related to investments from now and in the future, as I continue to share videos to help you along your journey. And if you find information helpful, please consider smashing that like button for me. Really would appreciate it so that more people can be exposed to the information. All right, so today's topic is, someone asked me how I go about selecting a stock that I'm going to invest in. So I thought that would be a good topic for a video, how to choose a stock. So I'm going to be sharing with you my method. The beautiful thing about the stock market is that it's so vast. There are ways for everyone to make money. And what you're going to find is the more you get into this, you're going to find your own flavor, your own niche, your own technique, your own strategy that works for you. And it's a beautiful thing. Everybody can have their niche, their technique, their strategy, and can do well doing what works based on your interests and your personality. So I'm just going to be sharing with you my flavor. This is the way I go about it and what's worked for me. Okay. So how to select a stock. Number one, I always assume this as a baseline that most people do, but I can't assume. So number one, you should not be investing in any individual company stock until you do this basic thing. And that is, if you have a job, you should be investing at least 10% of your salary into that 401k plan that they offer. Hopefully they do some sort of a match along with that. But on your end, at least 10% is the bare minimum target for me. And if you have a company that you run, your own business, you're an entrepreneur, then you should have a Roth IRA and should be doing the same thing, 10% minimum towards your retirement. That's the basic foundation everybody should do. And if you could even do both. I do both. I have 10% in the 401k, and then I have 5% in the Roth IRA. And the Roth IRA is incredible. I remember when I signed up for mine, I was unsure about it. It was a new thing. That ended up being one of the best decisions of my life, because now that it's been compounding for at least 12 years, once you put money into a Roth IRA, that money goes in post-tax. Normally a 401k is pre-tax. So you haven't paid taxes yet. The money grows and grows and grows over your career. When you retire and start pulling that money out, you're going to be taxed on that money each time. The Roth IRA, the money goes in post-tax. And in my case, I made a lot of good choices on stocks that I picked, and my Roth IRA has multiplied, doubled again. And it just hit me. All those gains are not going to be taxed ever again. It's amazing. And so if you become a good stock trader, it's a tax-free trading account. You can trade stocks, get 10% here, 5% there, and there's no tax anymore. It's the most incredible thing I've ever. So the basic thing to set up is make sure you're putting at least 10% in your 401k. And if you don't have a 401k, set up a Roth IRA. And if you really want to be aggressive, then set up both. On top of that, the basic thing that everybody should be invested in my opinion, is the S&P 500. The S&P 500 is an index fund with the 500 strongest public companies in America. So it gives you a small piece of everything from Berkshire Hathaway, JP Morgan Chase, Apple, Microsoft, Salesforce, Adobe. It gives you a small piece of all those amazing companies in one shot. It's like betting on America. I learned a lot about that from Warren Buffett. That's something he practiced and preached and put a lot of his money on. So the S&P 500 is a basic thing that I believe everybody should have, especially in your 401k, your Roth IRA. It's like a bet on America. And there's a lot, and make sure when you choose those funds, a lot of companies have funds. Schwab has one. Their ticker symbol is SWPPX. Fidelity has one. I forget the actual ticker. A very popular one that a lot of people like is Vanguard's. It's VOO. So that's a very solid one. All of them generally have low fees. That's the main thing you want to look at, is make sure you're getting low fees. I believe Vanguard is like 0.03%, something around there. But whatever you choose, generally, it probably will be at most 0.10% but make sure it's low fee, low cost. And that's a solid thing that most people should do. If the S&P 500 goes down a lot, then we have a lot bigger problems than you realize. But over the course of several decades, that's generally a fantastic investment. So again, the Vanguard symbol for that is VOO. You can buy that anywhere. If you really want to be aggressive, then you can also buy, you could consider the QQQ. QQQ is basically like the NASDAQ ETF, and that puts you more heavily into some tech stocks. So if you want to be a little bit more aggressive, the QQQ will put you in the tech stocks, Facebook, Apple, Microsoft, Tesla, stuff like that. And that one's a little bit more volatile, but it will have higher gains. And you could even do both. You can do a 50-50, you know, half VOO, half QQQ. Depending on where you work, they may have it set up a little differently. Like one organization I work for, it's more a C fund, a large cap fund and a small cap fund. So then in that case, I choose like 75% large cap, 25 small cap, or you could do 70-30, 60-40. So that's your baseline. Everybody should do that. And it's basically stress-free, worry-free. Do that, forget about it, and you can move on. If you choose to do more than that and you set up a brokerage account for just like your additional investments, maybe you want this liquid money that you're growing in a stock account, then you can set up a brokerage account outside of your retirement through, I use Charles Schwab, there's TD Ameritrade, there's Ally, Fidelity. They're all going to offer you similar features. In terms of the best features and charts and everything, TD Ameritrade probably has the edge, but it's not user-friendly. It's a bit more advanced. So if you're going to start buying individual stocks, you need to be prepared to put some time into it. I think at least an hour or two of research on a regular daily basis is pretty standard. So if you don't have time to do a lot of research and start reading up on things, then you might be better off just buying the S&P 500 index funds and keeping it moving. Okay, if you're buying individual stocks and getting deeper into it, it's going to take some time and some research. So that's the basic thing. Number two, if you buy stocks and you're investing in them, you have to learn about short-term capital gains and long-term capital gains. So short-term is if you do a trade and you sell and you've held the stock for less than 366 days, then it's taxed as an ordinary income and it'll be added to whatever you make for whatever your salary is for your job. Those gains, untaxed gains, will be added to that and you'll get taxed somewhere around your normal tax rate. If you hold a stock for 366 days, then you get long-term capital gains, which are very favorable. And generally that is between 15 to 20%. So long-term capital gains is a very, very advantageous setup because, you know, there's people who have significant accounts and make very high profits, but have a lower tax rate. You know, you can make 400 grand in stocks and pay less tax percentage than somebody working at like a restaurant. Just depending on, if you look at the percentages that people are paying with an ordinary 9-to-5 wage tax versus a long-term capital gains tax. So there is some advantage to holding for the long term. If you choose to invest in individual stocks, we got to lay these ground rules. In my opinion, I think you keep it to about 10 stocks or less. Okay. I think it's better to concentrate your forces and you don't want to get spread too thin. So in my opinion, when people start looking at 15, 20, 30 stocks, that's too much. I do 10 or less. Anything more than 10, then that you need to put the rest of that money back into the S&P 500 or QQQ. And the 10 stocks that I'm invested in, I want to have a number that's manageable so that I can look at those 10 companies and I can master those companies, and I can really, really pay attention to what's going on in the news, look at their stock chart, their earnings, and any more than that, it just gets too hard to keep up with and manage. So in my recommendation, I would aim for 10 or less, okay? Concentrate your forces, concentrate your effort. A lot of people misinterpret the whole diversification is key thing. Just diversifying is good, but if you over diversify, that kills the potential for you to make a lot of money, okay? Concentration is what builds your wealth. So concentrate on solid companies. You don't have to have everything, just the best that you can find, okay? When you want to pick a company, the next thing, before the first thing you want to look at are industries, okay? You want to look at industries first. So identify 5, 6, 7 industries that you think are key industries that you see huge upside and potential in. So that's the first thing you make. Make your list of the big industries that you're really interested in, the big industries where you think there's a lot of opportunity for money, okay? Map out the key industries that you are interested in. That's number one. Number two, once you have your industries identified, then look at the best company in that industry. Who is the leader? Make a list of the companies in that industry and you can research them and identify who is the strongest company in this industry. Who has the market, the competitive advantage? Who is the clear best company in this industry? You want to have, in my opinion, you know, I would look at the best company in each category. You want to get the top dog that has the competitive advantage, that is clearly the one leading the pack. You want to invest in winners and leaders. So just as an example, I'm not endorsing this company. This is just as an example. Let's say you looked at social media as one of your categories, right? Social media can generate a lot of profit for those companies with all the advertising. It's to the point now, because people share so much information about themselves, they can target ads so fine and so close to whatever your target customer is. So it's very profitable for the company and it's very effective for the advertisers. So if we look at social media, who was the clear leader in that space? Clear. It's Facebook. If you look at the App Store, the Apple App Store, and the Google Play Store in 2021, and you look at the top 10 downloaded apps in the App Store last year, in that top 10, you're going to have Facebook, you're going to have Instagram, you're going to have WhatsApp, and you're going to have Messenger. 4 out of the top 10 are all entities owned by Facebook. Okay, so they have a clear advantage. So that could be, that's the way you would look at it and say, okay, so Facebook is the leader in this category. That might be the first one that I'd invest in. Okay, so that's the way you want to take this down. What I found when I was doing this for my portfolio is when I made my categories, I realized I had some companies that showed up in multiple categories. So if I'm doing this and I have several categories and I have one company in multiple categories, that is a huge sign for me, okay? So again, this isn't an endorsement, but I'm just sharing information as an example. I had one category as e-commerce. Who is a clear leader in the e-commerce space? And there's a few, but one key leader in e-commerce that I identified was Amazon. However, I also noticed one of my other categories was cloud computing. Cloud computing has a lot of potential, something that I'm really interested in. Amazon is also a leader in cloud computing. They have Amazon Web Services, which generates most of their profits at this time. Then I looked at artificial intelligence. Amazon also has a lot of artificial intelligence generating in their business too. So they were in multiple categories. Okay. A second example, I also had Microsoft show up in multiple categories. Microsoft showed up in artificial intelligence, cloud computing, and they just showed up in general tech and as a general tech company. So if you make out those categories and you see a company show up in multiple areas on multiple categories, that's a very, very positive sign. That means they're probably generating income and revenue from multiple sources, which is a very positive thing. So that's basically the way I identify who I'm going to invest in. I set up my categories, I make my list, and then once I have all the companies in each list in each category, then I start to research each individual one. Sometimes I'll make notes and I'll list out, for example, I might list out all the different businesses that Google owns, and then I'll start researching those. I'll really just dig in until I can narrow it down to what I feel like is the top one or the top two. And in one instance, in one category, I couldn't choose, and I picked two companies because I just felt like they both were so positive. And that's really it. It doesn't have to be too complicated. That's how I select which company that I'm looking at moving forward. So once you've done that and you've chosen your companies, like I said, hopefully it doesn't have to be 10, but I wouldn't do more than that. You might only choose 5. The next thing you want to do is you want to look at some basic financials just to see and make sure that you want to invest in money-making businesses that are generating profits on a consistent basis, especially right now with the fact that the Fed is going to raise interest rates 3 to 4 times this year. That means it's going to become more expensive to borrow money. So businesses have to really be able to show that they can generate profits in a more difficult environment. Last year, everybody was making profits. Everybody made money last year because there was so much money being pumped into the market. It's not going to be that way anymore. So make sure that their financials look good. Now, a few things that you can look at and start to do some research on, and everyone's a little different. I don't put a ton of weight on this. I'm 75% technical analysis for my investing, and I'm only 25% fundamental analysis. Fundamental is when you're reading all the books and the profits and their the company information. But a few things you do want to be aware of and look at, and all this is public information, so you can look into it. But you want to look at the PE ratio. That's price to earnings. Okay, look at their PE ratio. A lower PE ratio is a good sign for investors. You want to look at their EPS, their earnings per share. Okay, and their earnings generally are released every quarter. The higher the earnings, the better. Okay, you want to look at their PEG ratio. That's price to earnings growth ratio. Lower than 1 or around 1 is ideal for investors. You want to look at their book value, price to book value, their price to book ratio. And a lower number here means that the stock is undervalued. So that's one way you can identify a good company that's undervalued at that time. So it may be a good time to purchase. And you always also want to look at the return on equity. Okay, the return on equity, ROE. A continual increase in ROE is a good sign for investors. Okay, so if you get to the point where you have a couple companies you're considering and you're not sure who should get the edge, and you start to crunch some of those numbers, that might show you which one really has the true advantage when you start comparing the PE ratio and the earnings per share versus the other company. Okay, so mark that out. You might even want to do it for the past 3 years, just so you can get a really good picture. And that'll give you just a decent idea of how their financials look. You have to just at least have some awareness. Now, once you've done that and you're happy with the way their financials look, you've identified your stocks. The final thing you want to do is you want to be able to identify an entry point. When is it a good time to come in? You don't just buy the stock blind any given day. Ideally, you identify a target price or a range to get in. All right, so I am sharing my screen. This is tradingview.com. A lot of brokerages have charting systems on the brokerage, but I love TradingView. They don't pay me, but their website just has so many different features I like. It's really good for chart analysis. So this is the chart for AMD, and I use what are called moving averages to analyze the chart. This is a 20-day, a 20, 50, and 200. 20-day moving average combined with 50-day moving average and 200-day moving average. So on this chart, the green line here is my 20-day. That's the shortest, that's the short-term indicator, the green line. The red is 50-day moving average, and the white is the 200, okay? So the first test you wanna look at, or in general, when you're looking at a stock, as long you want the green indicator, that's your 20-day, you always want that to be above the 50-day and the 200. In this case, it is. So as long as it's above those two, then you're in good shape. If it drops below the red, then that's a warning sign. And anytime the green falls below the red and the white, then that's normally when I would sell and get out and wait for it to rebound and come back up. A lot of times, that's considered what's called a death cross. And a lot of times, if your short-term indicator falls beneath the long-term indicator, that's a very bearish sign. And a lot of times your prices can fall significantly at that point. So this particular stock passes that test. Now I'm gonna hide that for a second. Okay. These are Heikin-Ashi candles. They basically show you the buying and the selling for each individual day. Oh, I didn't mention the time interval is 1 day. It's a 1-day interval on this. Okay, so all the green candles are days when it increased in price and it was positive. The red days show the selling. Down here, this is your volume, so you can see how much activity came into the market. So the really, really high green volume bars means there was a ton of buying that day. This day I'm showing right now is 141 million. And then the red ones are the days where there was more selling. So this gives you an idea of if the price is going down and you see really high volume, that's important to take note of, and vice versa. This bottom section is called the MACD. The MACD is really helpful to show you, just in general, it gives you a second indication about the trend. So for this particular stock, even though I'm still in a safe range, I can see the trend is starting to change a little bit. It's coming down closer to the red line. The MACD is negative. So those are bits of warnings. And it even is going to say, yeah, even here, it's kind of suggesting to sell. Now, I wouldn't sell it just because it's telling me here, but those are just indications you can take note of. Okay, but the main thing you want to do here, you want to start kind of identifying your support and your resistance lines. So your resistance is like the highest prices that it's hit in the past. And you want to make note of that so you kind of know what your targets are. So right now, this stock is $132.75. The highest price it's hit in recent memory is $164.74. Okay, so you see, I've just identified it with this little line here. Okay, the next level it hit is right about here, 155. It hit that as recently as December 28th. It hit 164 on November 30th. So you want to map out what your target is on the high end and the low end. And this particular snapshot is going back to October. So that's decent. I can go back farther. I can just zoom out a little bit. And I can go back as far as, really as far as you want, but I don't have to go that far back, but just so you see. So let's see here. Make it a little larger. Okay. On the lower side, the recent low was here, about 124, which was, that was actually this week. Okay. And then the second, that's your support. Support is the lower price, and resistance is the higher price. Resistance is what you're trying to break through to get to an all-time high. Support is what's holding it up. So if the price is falling, usually when it gets to support, if it's a long-term support, a lot of times it'll hold and maybe rest and maybe bounce off the support and go back up. But if it falls through the support, then that's a really bad sign, and then prices will start falling to the next level, which in this case, the next level would be about here, about 118. And if it fell through that, then you would have about 101, which that's not realistic for this stock. I already know. I would not expect to see it go that low this year. Okay. So now you kind of have your range that you can look at. So if you're looking at buying this stock, and this is just an example, if the stock is trading near its highest price, its all-time high, let's say right now this stock was trading at 160, and the all-time high, the high in recent for this year, in the last year, actually is 164. You don't want to buy at the all-time high. You're going to overpay, because you're going to always have pullbacks in the stock market. People get too worried and concerned about volatility, but stocks are never going to move in a straight line. It is never going to go straight up, and it's not going to go straight down. Okay. It's always going to zigzag. So you have to be accustomed to that and be comfortable with the fact that it's going to go up some, it might retreat a little bit, and then it'll continue up on that trend. So you understand where the trends are. Okay. So looking to purchase, if you know the high was 164, you can follow the 10-20-30 rule, meaning a 10% decline in price would be a decent price to buy. A 20% decline would be a good place to buy, and 30% would be a fire sale. That would be amazing if you happen to catch that kind of discount on a really good stock. Okay. So in this case, if our high was 164 and it's currently at 132, just by chance, that's actually a pretty good, price if you were looking to buy. So I'm just going to calculate that really quick, because I really don't know. So 164, 132, calculate, that's 19%. That's pretty good. Let's go back. So a 19% drop in price, this actually would be a good place. If this was a stock you were interested in, this would be a good place to buy, because you're 19% off the high. That's a good discount. You never want to pay the full price for anything, right? Just like buying a car. And then, if it dropped further back to test this 124 area, then you really have an opportunity to add more shares at a lower price. That's called dollar cost averaging. If you added more at the 124 price, your average purchase price would now drop from 132 to like 128 or something. So that ends up giving you even more profit when it goes back up to the 164 price. Okay. And the person that bought at 164 will lose money when it falls back down to this support level. Now, it may come back. Let's say it drops down here. In 4 months, it may go back up and pass 164 and get to 175. So you still made money if you bought at 160. Maybe you made $10 to $15 a share, but the person who bought it at 132 and then added on at 124 made a lot more money than you did. So your entry price that you get in is really important. Also, another reason you don't want to have too many stocks is, once I have my 10 stocks, I look at their charts every day. I'm really into it. But you want to pay attention to your stocks, their patterns, how much they generally move on a daily basis. You'll get invited to earnings calls because you are a shareholder in the company. You can vote. You should listen into the calls, pay attention, listen to what they're talking about. You can learn inside information because you are a shareholder. So you want to learn your company and learn their patterns. If you have a whatever phone you have, whether it's Android or iPhone, get a stock app and add those stocks to your watch list and look at them every day. Just pay attention to what they're doing. When you click on your stock, it's going to show you articles that are relevant to that company. So then you can read those to kind of understand. They might have just acquired somebody. They may have a new product coming out. Just you really want to get into the companies you own so that you're understanding their business a little bit deeper. You know their chart patterns. You've kind of seen in general how much the stock moves on a daily basis. You can't do those things if you own 30 stocks. Okay. So that really is it. So just pay attention, do your research. And like I said, it takes time. So if you're not willing or don't have 1 or 2 hours a day to research and continue to build your knowledge and your awareness on your companies and these stocks, then you probably are better off just buying the index funds or the ETFs, because choosing individual companies is not easy. A lot of people fail at doing that, and they choose the wrong kinds of companies, or they get sucked into hype. One of the reasons I am more into technical analysis and the chart is because the stock chart discounts everything that's going on, and you can look at the averages on a daily basis. You can look at it. You can look at it hourly, daily, weekly, monthly, and yearly, and see in general, what is the stock done on average, and what can I then predict or anticipate based on those averages. For me, that makes more sense. And I look at some general fundamental things to analyze, but I don't have the background to just go through the accounting wizardry of some Fortune 500 company. You know, who knows if they're cooking the books, all that kind of stuff can get really complicated. And so the average person, in my opinion, probably can't do that. We're not, unless you're a CPA or, you know, you got your MBA in finance or something like that, maybe you could, but, you know, so in general, just look at your basics that I covered, and then you analyze the chart to look at your averages, and you can keep it moving from there. So hopefully that's helpful and gives you an idea of where you can start in terms of choosing companies to invest in. And as always, just let me know any questions, and best of luck to you in your trading journey. Peace.